August 5th, 2025. The day started out, obviously yesterday was a bull trend, and we ended up basically with a big sell-off and converted into a trading range. I personally thought, you look at the swing points, I thought we would find some support here, maybe a little bit. I thought the 9 low would be support. We blew through it. It ends up becoming resistance. So when you have support and you trade right through the support and it doesn't really stop, then that now becomes resistance. Because that's a place, if you think about it, there are traders who should be buying the bottom of this channel, buying the 9 low. Spike, pullback, channel, and channels tend to convert into trading ranges. So this whole thing could be a leg in a trading range. So when you blow through support, there are traders who bought this low expecting that we would bounce at least a little bit, which you could argue, on 10 or 15 we did, but expecting we would bounce at least a little bit. And they bought that low, and then they get trapped. If you bought that low and you got trapped and you bought more, now when it gets back to this price, you're disappointed, you're going to sell. It creates resistance. So that's kind of how support and resistance works. We have 3-4 legs up, and then we have 6 and 7 consecutive bear bars. Really strong, large bear bar on 7. Okay to sell the close of 7 and scale in on 8. Really disappointing bar on 8, so probably sellers above. 9, a low 1 short. I'm not a big fan of swing trades personally at this stage in my trading, but if you are someone who likes swing trades, look for a low 1 after a strong breakout or a couple of strong breakout bars. That's a pretty good idea. And there's a gap open with the 1 low and the 9 high. 9, 10, and 11, 3 consecutive bear bars. I sold the close of 11. Disappointment on 12. If 12 got follow through, I would have exited, but you can see instead we sold off and I got the second leg. 15, a big bear bar. I sold 15 as well. It was a late leg, so I don't love trading late legs, but I do it a good amount of the time. I did sell 15, and then we got a surprise against 17, 18, 19, so I exited to take above 19. Yes, this is strong enough that we'll probably still go back down, but it's just not worth it for me to continue scaling in to look for the half an hour when I can just take a small loss here rather than continuing my risk exposure. So I took a very small loss here. I had a 1 hour win here. 22, 23, 24, I did not take. We had consecutive strong bull bars here. First off, this was a 4-bar microchannel or 5-bar microchannel on the 15-minute chart. Whenever you get that, there's a high probability that you're going to pull back to around the low of the 3-bar microchannel. So if you took 19, you're accepting the fact that we're probably going to pull back into this area. 22, 23, 24, sellers above 24 for a second leg down. If 25 is a big bull bar and maybe gets some follow through, traders might look to exit. 26, good for the bears trying to get back to the 16 low. We did not, and you can see this turn into a complex pullback and a reversal up. So we have 3 legs down. We might need another leg up from this. Some traders would take the swing trade above 29. Others wait for 30. I waited for 31. I bought the close of 31. I got 1R. 37 through 39. 38, 39, and 40. I did not sell. This is a 4-bar microchannel, 3-bar microchannel on the 15-minute chart. And I try not to trade against higher time frame breakouts. But if you do sell, 41 is a surprise against, and you do get a half an hour, the ability to exit on 42 and 43. So if you took the short, you can get out here on 43 before the market moves too much against you. 43 through 45, I did take 45. Wasn't my favorite trade, but the 10 plus 2 came back good enough that I'm going to take the trade. So I bought the close of 45. I scaled in a few times and caught the symmetrical second leg on 46 around up here. 47, 48, more follow through, consecutive bull bar. So 3 straight bull bars, 3-bar micro channel. However, a late leg and the 10 plus 2 score was not all that great. So I just left 48 alone. 54, 55, 56, a good 3-bar micro channel, but this was a really tight channel up and a breakout on a higher time frame. So I left it alone and we just sold off without me. And so those were my trades today. A good win here, a small loss, a good win, a good win. So I had a decent day today. I'd imagine it was around a 50% pullback of the whole thing. Yeah, somewhere in that general area. You can see the 12 high. It's possible we tested all the way back up. We tested the 9 low, right? Because 9 low is a swing trade. So spike, pullback, maybe channel 1, 2, 3 legs down in the channel. And we tested back to the low of the first leg. So the swing point. Traders who bought below 9, just expecting a small scalp, probably should have been able to scale in and make money. Low ones, it's not a good idea. Don't buy below 9. But low ones in general aren't high probability trades. And so when they work in a dramatic fashion, like 9 did, you would expect that we would test back to that point and form a trading range as we did. It's the same thing with 29. It's not a high probability trade. It's a good context to take the trade, but it's not a super high probability trade. So when high probability trade or when low probability trades work, like it did 31, 32, you get a couple of legs, and the traders who continued scaling in, they get let out. You can see they did over here. The daily chart. Let me just pull up the. Just pull this up. Okay, so looks like big up, big down, big confusion to me. Yes, strong consecutive bars. These should get a second leg, but this is a big enough bull bar that it might also need a second leg. So we're in a little bit of a difficult area here, middle of a trading range. The weekly chart, you can see consecutive bull bars and then a big outside down bar. We're trying to rally back up to the close of the 721 for the bulls. The bears are hoping to get the second leg for 728 rather soon. All right, for that's really going to be it for this video. I don't have a whole ton I'd like to say. Just, well, I'm not going to talk too much on that actually, but I think that personally, I'll just say this. I think that personally, swing trading is great. So there's two ways to learn how to trade. You either find a high probability event, like the 3-bar microchannel getting a symmetrical second leg. Give it to you for free. It's a 76% chance that happens. There's certain things you can filter that'll make it higher probability, and there's certain filters that obviously make it lower probability. So you have to figure out what those are, which takes a little bit of time and resources, or just energy, which is a resource. So the ways to do it are you can find a high probability event and figure out when the low probability event is happening against you and how to get out, or you can take a low probability event, swing trading, and just basically try to figure it out to the point where you can understand what a high probability thing is. I did the low probability swing trading to the high probability change. So I did low probability swing trading for like 5 years, and I could not figure it out. It's very difficult to do because you have to understand a lot about context. But the high probability event, the general probability, so you can always fall back to that. So you build a default way to trade via doing this. And I personally think, and Ali thinks, Ali and Al disagree on this. And Al, if I had to have dinner with Ali or Al, I'd rather have dinner with Al, just because I've watched him for so long and I appreciate everything he's done for me. But I personally agree with Ali that it is easier to find the high probability event and look for when the low probability event is occurring and really start to understand it than it is to do the opposite. All right, that's basically going to be it for this video.